Our fearless leader has spoken and mentioned 50-year mortgages to help get the housing market moving again. Interesting idea, but not a new one. But I guess something needs to be done since the Federal Reserve seems to think we all like high interest rates. Since he mentioned this, I've already had multiple people reach out and ask me if I think this is a good idea or not, if this will work or it won't. Well, the answer is, it depends. I'm Michael with Michael Robe and Associates, and let's unpack this 50-year mortgage thing. Let's talk the pros, let's talk the cons, and the in-betweens. So, you heard about 50-year mortgages. Yep, 5-0. Sounds crazy, right? But they do exist. And like most things in real estate, there are a lot of pros and cons. So, let's break it down. First, the good stuff. Number 1, lower monthly payments. Stretching your loan over 50 years makes those monthly payments smaller than a 30 or even a 40-year loan. That can make a pricey home feel a little bit more affordable. Number 2, better cash flow. If you're tight on a monthly budget, or you'd rather use that money elsewhere like investing or just having a cushion, a 50-year mortgage helps free up some cash. And number 3, easier qualifications. Because the payments are lower, you might qualify for a higher priced home. But be careful, that can be a double-edged sword. If you already own a home, this may drive your sales price higher, increasing your equity and increasing the wealth of many Americans. All right, now let's talk about the not-so-fun side. First, you'll pay a ton more in interest, a lot. On a $600,000 loan at 6.5% interest, a 30-year loan costs about $1.36 million total, around $760,000 in interest. A 40-year loan, $1.56 million total, over $960,000 in interest. And a 50-year loan, $1.78 million. That's $1.18 in an interest. That's almost double what you borrowed. I mean, geez. Next, you build equity super slowly. Banks aren't stupid. Most of your early payments go towards interest. So, if you sell or refinance early, you might barely chip away at that principal amount. And finally, these loans are harder to find and usually come with slightly higher interest rates since the lender's taking on more risk. So, who's a 50-year mortgage actually for? Maybe a younger buyer who wants the lowest possible payments for now? Or an investor focused on maximizing monthly cash flow? But for most homeowners, it's a long, expensive road. You'll save money on your monthly payments, but you'll pay for it big time in the long run. Point is, there are already 50-year mortgages now. They're just really hard to find. If they become more mainstream, we'll have a lot more information, and this may make them a great choice, or not. Time will tell. Like anything, there is no one-size-fits-all. For some, a 15-year mortgage is a great option. For some, a 50-year may be the ticket. So, if you're thinking about creative financing options or want to compare your best mortgage choices, reach out. I'm happy to run the numbers for you. And don't forget to like, follow, or subscribe for more real estate tips that actually make sense. You can also call me directly at 619-701-0309 anytime, and we can just have a free over-the-phone conversation. Anyways, talk to you soon. Hope you guys enjoyed this info.